Hello everyone, and welcome to today's webinar. We have a great session lined up for you today. Before we get started, there are just a few general housekeeping points to cover. First and foremost, please use the online question tool to post any questions that you have, and we will share them with our speakers. Second, if you experience any technical difficulties today, please use the same question tool and a member of our admin team will be on hand to support you. And finally, just to note, this session is being recorded and we'll be sharing a copy of the recording with you via email in the coming days. So, without further ado, I'd like to hand over to our speakers to get us started.
Hello everyone, thank you so much for attending. We are delighted to have such a big turnout. We have a wonderful lineup of speakers and some fascinating topics. I'm Joy Davey, a partner in the financial services team at CMS, and I'll be moderating this session and hopefully asking some interesting questions. I specialise in financial services outsourcing and the operational aspects of FS regulation. By way of a brief introduction to our wonderful panellists, we have Sarah Brooke, who is a partner in the CMS financial services team. Sarah focuses on firms that operate in the insurance market and advises on a range of regulatory, contentious and advisory work, including how AI is impacting the insurance sector. Tom Calaby, who is also a partner in the CMS financial services team. Tom advises firms operating in the financial markets, including buy and sell side firms and their tech and data providers, on a range of regulatory and commercial matters, including market abuse and MiFID compliance. Finally, we have Tony Clark, who is founder and CEO at NextWave. NextWave works with financial institutions to modernize their businesses through technology, principally through automation, AI, and data technologies. Tony has over 30 years of experience across the business, digital, and technology sectors. So, CMS and NextWave have teamed up together for this masterclass, which means that we are hearing from not just lawyers and legal aspects of FS regulation, but also how AI is being approached in the financial services industry operationally and in practice. So, let's get started. Firstly, Tony, let's start with the basics so we're all on the same page. What do we mean by AI in a financial services context?
Thanks, Joy. Well, this seems like a great place to start. So I assume the audience are pretty familiar with AI in general, as we've all been living in really what feels like an AI world for the last 15 months. It certainly seems that way to me from all the news and conversations that we're dealing with every day. AI is not new, of course. The term was first was used back in the 1950s, and there are folks in my network who've got degrees in AI from 35 years ago. We're talking about technologies that can emulate and surpass human cognitive functions, so learning, problem solving, decision making. There are many techniques under the broad label of AI, and these range from machine learning algorithms and neural networks to natural language processing and to robotics. And we've seen a number of these already deployed by financial services firms. So, voice recognition in call centers and identity recognition technologies are already out there. But it's generative AI that's really taken the industry and the world by storm. And that's all about large language models that have been trained to generate language, code, vision, images, data, and audio. And the take up since the launch of ChatGPT in November 22 has been extraordinary. I'm sure everyone will agree. And in financial services, I think we see that AI, together with automation technologies, has really got the potential to radically change the way the industry works. And this is across customer operations, it's across risk, compliance, finance, in fact, all areas of the business. And I'm sure we're going to look at some of those use cases later in this conversation.
Tom, from a reg perspective, what do we think of AI in that context?
Yeah, so I guess from a legal perspective, there have been a few different approaches so far. So the OECD has defined AI as a machine-based system that, for explicit or implicit objectives, infers from the input it receives how to generate outputs. So those can be a range of outputs, predictions, content, recommendations, or decisions that influence physical or virtual environments. So we've seen the EU very recently adopt a very similar definition to that in the AI Act, which we'll come on to discuss in more detail. In the UK, historically, we've always had a technology neutral approach to FS regulation. So that means that principles and rules apply regardless of what tech you're using, so whether or not you're using AI. And the UK government is concerned that if they set out a definition, so if they follow that EU approach, that could stifle innovation because you could inadvertently capture tech that shouldn't be in scope. But also because it's such a rapidly evolving area, you could then prevent, the regulation may not then keep pace. So the UK isn't currently looking at a statutory definition of AI, but instead what we're looking at is asking the regulators to focus on systems that are adaptive and also that are autonomous. So if you've got those two characteristics, you've essentially got an AI system for regulatory purposes, but there's more detail to come on that.
Great, yeah, as you say, I think we're going to deep dive into that in a bit more detail in the coming time. But I'd be really interested to understand, what does AI and its use in the financial services industry mean to each of you and your clients? Sarah, perhaps you could kick off on that.
Yeah, of course. Thanks, Joy. So I think, setting aside for the time being the various challenges and complexities that it poses, the recent developments in AI are hugely exciting in almost any context and has clearly captured people's imaginations. So within the world of financial services, AI has the potential to really revolutionise the sector and to help solve some of the structural problems, particularly when we look at the retail market, such as plugging the advice gap, for example. And the sector seems to have really grasped this opportunity, particularly the banking and insurance subsectors, which the recent sort of PRA SCA study has shown that these particular sectors are expected to see the steepest increase in the use of machine learning technologies over the next couple of years. So they're really, really grasping this opportunity. At its highest level, AI could, if managed correctly, make markets safer and more efficient. For example, by enabling firms to process and act on the vast amounts of data that are being created, which could, for example, result in more tailored financial products being available at a reduced price. And then on the flip side, for regulators, AI could help give them the tools that they need to appropriately supervise and monitor the market, for example, by enabling them to better detect market abuse. Within the retail market, some core use cases, and there are loads of use cases, but some core ones are, for example, reducing the cost of receiving financial advice through the adoption of automated advice tools, or moving away from generic mass market products and more towards individualized solutions without the additional cost that this has historically brought with it. Looking more at the world of insurance, which is a market that for centuries has relied on highly complex actuarial models to underwrite products, AI will vastly increase the amount and type of data that can be used to assess risks and feed into these models. It can even be used to develop its own models if it's sort of using the right technology and teaching it in the right way, which can adapt then automatically to respond to new risk events. It can also be used in sort of claims management and help to streamline the manner in which claims are reported, handled and settled, and to help automate these. So there's many other examples. They're just a few.
It's super interesting in a world where financial institutions are data heavy and sometimes knowledge poor. So Tom, I'd love to hear a bit more about that from an investment firm and banking perspective.
Yeah, so I think, as Sarah said, the regulators have identified that firms are using AI, and increasingly so, and I think it's more material as well. So yes, we've seen machine learning in order routing and execution management, but also in kind of firm critical areas like modeling credit risk and regulatory capital. For many years, we've had fund managers, there have been particular specialists in the market, and principal traders who have embraced statistical techniques and have moved that into sort of AI models. And AI signal generation now drives, I would say, a large volume of trading and market making in the UK. There are certainly a number of firms out there who are using those techniques. So I think we're at a stage where some firms and some asset classes are very advanced. and in some senses are showing a way forwards to others, and also even to the regulators in some ways, who have a lot to learn from some of those firms who have already integrated it within the existing regulatory frameworks. But others are much more high touch and maybe less automated, not using AI so much, and are kind of at the start of that journey.
Interesting. Okay, Tony, briefly, a view from the industry.
Thank you. So Nextwave is working with firms right across the sector, so that's buy side, sell side, and also some of the market infrastructure firms. So we're seeing, a broad perspective, and we do see a huge potential to transform the industry front to back. I'd say our clients and us with them are largely in research and experimentation mode. And firms are going at very different paces. So we've sat with clients, we've sat in round tables where we've had sort of complete difference of pace at the opposite ends of the table. But so surprisingly so, sometimes within the same sector. So I think some firms are trying to be at the leading edge on this, and others are just sort of hanging back and waiting to see what will happen. It feels like we've gone beyond some of the initial hype around co-pilots and ChatGPT. It's a little bit less visible, but the work's still happening in the background. And I think what's been startling to many is how quickly some of these applications are coming to market, certainly compared to the innovation cycle in crypto or metaverse evolution. AI seems to be moving much faster, and it's more sustained. The broader environment, there were 70 or so AI startups every month last year, and pretty much every big tech or SaaS platform is now AI enabled. And I know that the FCA, Bank of England, did a recent survey, and they found that 72% of respondent firms are actively using or developing AI applications. And then they said they thought that was going to triple in the next 3 years. So I think everyone's very much on board. Just to call out a couple of use cases, and there are literally hundreds. Our team have compiled 200 or 300 use cases in this space, but there are some that are more public and are out there. So BlackRock have been leading. I believe this quarter they're rolling out a co-pilot on Aladdin and eFront, so you can use a language model technology to interrogate the models and the risk profiles of all the data that sits in the platform. In the insurance space, there are AI lending applications like Upstart and C3 AI, and they're claiming 30% time improvements, 98% accuracy improvements, 53% fewer defaults. I mean, these are big numbers. And one that I particularly like, because it's a strategic partnership that Nextwave have, is Quantexa's platform, which collects data from multiple sources, entity resolves to score risk around a particular person or a particular business. And that's being used very successfully by fraud and risk investigators to find patterns in the data. And Contexa have recently put an AI assistant over the top of the network, so you can now talk to them in natural language, and you can say, who's the riskiest person in my data, or what are you seeing in here? Are there some clients that we should be banking in this data, in this massive data set, and interact with the machine in that way. So, and I'm just scratching the surface here. There's a huge amount going on. And I think when you couple generative AI with automation, that's where we're really going to see the dramatic end-to-end use cases. I don't think too many of those have come to production yet, but we're going to see more later this year. And this is all only heading in one direction.
Fascinating. Stay tuned. So, Tom, how is the UK government approaching regulation of AI?
Yeah, so I mentioned earlier kind of the initial sort of thoughts in the white paper. So we had a white paper from the government back in March 23. We were expecting a follow-up to that. We then had that delayed for the AI Safety Summit at Bletchley Park in November last year. And only in February this year, we've had the government's update, and it's confirmed that effectively, as Sarah will cover, I think, shortly, its policy position. But it's also, I think, importantly for everyone on this call, it's said that by the 30th of April, it wants to hear from all the regulators, and that's from the ICO and the Health and Safety Executive, but it's also, importantly, the Bank of England and the FCA as well.
Yeah, thanks, Tom. So just a little bit more detail on that. So the government has it's made it clear that its aim is for the UK to become an AI superpower, so pretty lofty ambitions, founded on the values of transparency, accountability and innovation. In terms of regulation, however, the government's view is that the existing sectoral regulators are best placed to regulate AI in their respective sectors. So with this in mind, what the government's done is they've issued 5 cross-cutting principles to the sectoral regulators, and the regulators then expected to sort of take those principles and implement them within their respective remits. For now, these principles are non-statutory, but the government has kind of recognised that there may well come a point in time when they need to be placed on a sort of statutory footing and take a more formal approach with the regulators. As Tom mentioned, the ICO, CMA, FCA, Bank of England and various others have received letters from the government recently asking them to set out their capabilities to deal with AI risks, their ongoing and future work being undertaken to understand and deal with these risks. And importantly for us as lawyers and for a lot of people on this call, the regulators are also going to set out the steps that organisations they regulate should take in line with the government's principles. And so it's going to be important to look out for that on the 30th of April, and we should have an awful lot more direction there and a bit more clarity on what the regulators' views and expectations are on how firms deal with AI. Now, very briefly, because we're in an election year, it's probably worth noting that should a Labour government be in power sort of by the end of the year, they are likely to take an interventionist approach. When the government's white paper came out earlier last year, Keir Starmer described the government's approach as overly laissez-faire. And I think Labour have spoken openly about potentially introducing a licensing regime for AI developers and making the current voluntary testing agreement between the government and AI companies, placing that on a statutory footing. So there could well be a bit more of a push from the regulators to take some action should we have a new government by the end of the year.
Fascinating. Okay, I'm super interested. How does the approach in the UK differ to other regions, for example, EU, China, US?
So there's a general acceptance, I think, that AI should be dealt with on a global basis. It's a global product. It makes sense to take, I've been privileged to start this, it makes sense to take an international approach, but there is still a race to set the gold standard for AI regulation. This means that there are a variety of approaches being taken around the world, unfortunately, including introducing new regulations, relying on the publishing of guidance, simply reviewing and adapting existing rules, or any sort of combination of these three. Don't have time to go into a global analysis, but I will try and give you a bit of a feel for what's going on in some key jurisdictions, starting with the US. As the home of many tech giants, it's inevitable that the US is going to lead the way and seems to be running against the push for a worldwide effort. The US is setting up its own institute to police AI and has passed an executive order issuing directives to federal agencies and regulators in this regard. In China, there's been it's moved quite quickly in introducing regulation for subsets of AI. So it's issued regulation for generative AI and in relation to deepfakes. And it's likely that a broader AI Act is going to be drafted sometime this year after an artificial intelligence law was introduced on last summer's list of legislation that China is working on. Now, the EU is particularly interesting in this regard and has agreed on an AI Act, which is the world's first comprehensive horizontal legal framework for AI regulation. And I think Tom's probably got a bit more to say on that.
Yeah, so I'm going to try and give you a couple of minutes on that and just distill what I actually think is a really interesting bit of legislation. I would, if you're interested in AI and kind of how lawmakers are thinking about it, and you've got the spare time, then I would recommend it. So the EU has been working on an AI Act since 2021. December 23, we had political agreement. So now we do have a near final text. We're waiting for formal adoption from the EU Parliament. So that's expected in, I think the plenary votes are on the 10th or 11th of April. So in general, then 2 years from that date, so sort of April, May 26, the majority of the AI Act will come into force, but certain provisions, so for example, in relation to prohibited AI practices, will apply after 6 months. And then in relation to general purpose AI models, such as your ChatGPT based systems, then that's 12 months after. So from later in this year, we could have some of those provisions coming into effect. Now, one of the key things, I think, for UK firms and non-EU institutions that have EU customers or EU employees or just any kind of EU nexus is the fact that the AI Act has an extraterritorial effect. So even if you're based outside of the EU, if you are using those systems and the output of that system is used in the EU or has an effect in the EU, then you are potentially in scope of the AI Act. So it becomes important then to think about, what does the AI Act say and is it relevant to my business? So it works on a risk-based approach. So we start at the very highest level of prohibited practices. Those are things like social credit scoring systems. And then below that, there's a tier of high-risk use cases. And that's a kind of fixed list at this point in time, but it can be updated over time by the EU Commission. And those high-risk use cases are subject to more stringent requirements. Then all AI-generated output, so for example, if you have a chatbot that's delivering advice or customer service, that will be subject to transparency and disclosure obligations. So you'll have to tell customers that they're speaking to an AI chatbot. It won't be able to pretend to be a human, as is sometimes currently the case. I think for financial services firms, there are a couple of particular high-risk use cases. So we've got credit scoring and insurance pricing, so health and life insurance pricing. They are high risk by default. So for example, if you're running sort of insurance pricing out of London and that's then having an effect in the EU, then you may well be caught by the EU AI Act. Another point is that deploy an AI system and modify it in any material way. Sorry, we have a fire alarm going. I think we may have to just pause, if that's okay.
It's okay, Tom. I think we can keep going.
Okay, if you can bear with me. Sorry, that's a bit off-putting, but anyway. So another point I wanted to make is so the sort of level of obligations under the Act depend on whether you are a provider of a system or a deployer of a system. Now, most financial services firms may not be the provider because they may not necessarily be sort of creating the AI system, but if they make any material modifications to it or they put their own branding on it, then they may well become a provider for the purposes of the Act. So that's why I think the AI Act is extremely interesting, and I think it will be increasingly important for UK financial services firms and non-EU financial services firms, as well as those cross-border groups in the coming years.
I find it super interesting too as a lawyer, and I'm hoping our audience does. I'd love to now turn to the challenges. So Tony, from your perspective, what are the biggest challenges for regulators in designing a framework that works?
Yeah, thank you. So clearly firms are going to need to pay attention to the upcoming regulation. For the regulators themselves, I just call out a couple of things that we see. Keeping pace with evolution of the technology, so the complexity of the models, the new capabilities and architectures that seem to be coming out every month, super hard to keep up with, and the scale of the data generated by the financial institutions. So the FCA has trading data coverage of 500 million records a day, and I gather that's forecast to double, and they publish 49 data types collected from over 50,000 businesses. So I mean, these are big data sets, and there's a lot of coverage, and the whole space is just evolving so fast. So I think keeping pace is going to be part of it, and maybe this is a part of the same challenge. But I would I would also say that creating guide rails for the industry on something that's already happening, so it's already in motion, it's out in the wild. There's a sort of nice example. If you go on the ChatGPT store, you can take an app. There's thousands of them. You can take an app called Wealth Manager, and you can plan your retirement. And I tried this a few weeks ago, and I fed it my fictional retirement plan. And the app not only gave me a model portfolio example, it also then branched onto Bing, and it looked up on live data, and it actually recommended real funds. So it built me a portfolio, and I have no way of knowing really how good that advice was or where my data went, but it looked quite authentic and accurate. So if you're in the wealth industry and you've got distribution networks and you don't really know how much of this technology is already being used and represent to clients, and how the regulators are going to address that, and indeed how the wealth firms are going to bring that under common policy and control is a tricky one.
That is indeed. Sarah, how about the regulatory challenges? Oh, it looks like Sarah might have frozen there. So we will. Tom, do you want to add a little bit on the reg challenges?
Yeah, can you hear me, Joy?
I can.
Okay, great. So I think that the challenges posed by AI don't exist solely within the remit of the FCA and PRA. So there are considerations. There's also the ICO from a data perspective. So financial services firms, they operate within the remit of a number of different regulatory bodies. And so I think the issue for the regulators is coordinating, because there could be a lot of unnecessary complexity and friction if, as a firm, you've got to worry about all of these different requirements and they don't talk to each other or don't work together. So with that in mind, though, the regulators are attempting to cooperate together, and that there is a digital regulation cooperation forum. I think another challenge, and one that we'll come back to, is also the expertise within the regulator and the regulators. So maybe, for example, the FCA may not have the same level of data protection or data expertise and knowledge as a regulator like the ICO. So it's bringing those skills to the table in the framing of the regulation, as well as, of course, as we'll talk about on the other side, for the institutions that have to implement all of that and comply with it.
Thanks, Tom. So thinking about kind of how the financial institutions are approaching AI developments generally, Tony, could you give us a bit of a flavour on that topic and the approach that currently that financial institutions are taking?
Sure. So we talked briefly, that some of this technology is already deployed, and many firms are already leveraging AI on narrow use cases, so chatbots for customer service, for example. But pretty much everyone that we talk to is now exploring and experimenting with generative AI, and this sort of starts with setting up an AI team. So we're seeing that happening, and that team being mandated to work on allowed models and technologies and framework for developing AI, and at the same time capturing ideas from across the business and filtering those for business benefit, for safety, for ethics, and for reuse, and filtering down to candidates to take forward for POC, proof of concept, and pilot build-outs. And that's the sort of innovation cycle process that we're seeing at several clients. There's one of our top-tier banking clients has, and it's only one area of the firm actually, has 60 use cases, and they've been putting them through those filters, and they're trying to pick 2 or 3 to take forward. And this is happening at a sort of central team, center of excellence type level, where firms have put that construct in place. But more broadly, the businesses are also adjusting their organizations. So appointing a head of AI, hiring for key roles, data science, data engineering, this new skill set of prompt engineering that we keep hearing about. That's going to be on everyone's CV. And very many conversations have AI in them, and there's a lot going on. As I said a few minutes ago, I don't think all of it's immediately apparent, but there's a huge amount of work going on in the background. And there are also firms that are looking outside of industry for truly innovative ideas. I mean, I've spoken to people who are deliberately bringing neurodiverse people into their business to come up with new ideas. There are examples when you start to look outside of the financial institution sphere, in the wider environment. Of course, there's all sorts of innovative ideas, and we saw this in the dot-com cycle at the start of the century, when there were bankers started to look up and look out and say, what is this e-commerce revolution, and bring those ideas into the bank. And I think there's an advantage from doing that as well. I was telling a story. There's one of my friends runs a very digital first restaurant, and they're using AI and face recognition to measure how fast the queue moves, and then they're feeding that data into the guys behind the counter, so that they get better throughput on serving bowls of noodles, and they can actually tell you how long you're going to be waiting in the queue when you turn up. And it sounds a bit sort of random and tangential, but I think looking at some of the things that are happening outside the industry will drive folks to actually change the models a bit, rather than just trying to automate what they're already doing. It's doing things in a different way. And just two other things on this. It's quite a big question, but I think just to reflect back to what Sarah was saying about the government's 5 pillars, we are seeing firms who are aligning their efforts around those 5 pillars. So that's quite a smart move, because then you're regulator ready in terms of being able to explain what you're doing. And lastly, AI budgets, so budgets for all this work. I know that several institutions have been a bit caught out because the scale of the opportunity and ambition to work on AI wasn't necessarily apparent in 2022 when budgets were being set. So last year, so some of the businesses were sort of borrowing and stealing budget from other areas to try and fund their AI efforts. And it'd be interesting to see how well funded all of this work is as we go into this year.
Interesting. Tom, did you have anything to add to that?
Yeah, so I think it's really interesting, Tony, and I think the sort of initial reaction from some institutions, as we've talked about before, was to kind of just say, okay, let's turn it off. And I think that's particularly when we had ChatGPT, and obviously that's not on firms' own systems and within a closed environment. So you can see where the concerns were about data, confidentiality, NMPI, and inside information, and the rest of it. I think now it's definitely moved on. So you still have those policies, and I think that is extremely important. But it's I think something that Tony can speak to and will speak to is the fact that you have tools that allow institutions to have the sort of confidence that they need from a regulatory perspective in order to start to use AI. And I think the other thing that I would point out is just ownership by compliance and legal. So we obviously work with lots of different institutions, and increasingly you're seeing people who now that is their particular area of coverage is AI, and also other areas like digital assets, and there are specialists kind of cropping up within firms within legal and compliance, and I think that's really interesting and just shows the sort of direction of travel.
So on that point, Tom, what are the main regulatory concerns for firms then when they're managing AI?
Yeah, so I think I kind of said it before that I think there's a lot of different regulatory principles, and some of them are pretty high level. So FCA requirements, for example, around systems and controls, risk management, and governance. And I think the challenge for firms is to work out what does that actually mean in practice for using AI and deploying AI, because we don't currently have specific rules on AI from the FCA or the Bank of England. But I think there are a number of places that firms can look. So, for example, since MiFID II came in 2018, we've had pretty detailed rules on algorithmic trading. We've had certification functions already under the SMCR for people who are responsible for deploying those algorithms. And we've also had the PRA setting out its expectations on model risk management. So AI systems may have within them elements of that, so they may be used for algorithmic trading. They're likely to be models based, so you can then look at those requirements and extrapolate from them. I think there's an open question still from the FCA about whether they bring a specific accountability or responsibility under the SMCR for AI. Ultimately boards will remain responsible for everything that goes on within their firm. So if AI is being used within the firm, then the FCA will hold the board accountable. They will also hold the senior managers who have overall responsibility for particular business units accountable. But I think whether or not we have that dedicated senior management function or prescribed responsibility, I think the challenge for those people who are senior managers and who are regulated by the FCA directly is how do they show that they have demonstrated they've taken reasonable steps in the context of AI. And I think that's the real challenge, and one that firms need to think about. And that, it's potentially a combination of skills, making sure you've got the right skills, but it's also making sure you've got the right experts that you can bring in to look at things within the firm and to audit things as well.
Sarah, did you want to add anything there? And welcome back. We're really demonstrating AI in practice.
Yeah, so I think building on what Tom's just said, there's a vast array of great use cases for AI. I think there are some real regulatory concerns out there, and I think one of the big ones is around consumer protection and how firms can evidence compliance, particularly with the new consumer duty. So if you've got the increasing use of granular data about individuals, whilst this can have some positive effects, there is also a question mark over whether it gives rise to potential for customer disempowerment. So, for example, through the technology taking advantage of behavioural biases or vulnerable characteristics of individuals, which could then feed into either the pricing and or the marketing of products. There's also a real concern in the insurance sector in particular that the volume of granular data that's now available could, if used in conjunction with AI, exacerbate existing issues and question marks about sort of big tech and big data, and whether that can potentially lead to the uninsurability of certain individuals or groups of individuals because of smaller risk pooling developing. Linked with this, there's also sort of serious ethical questions around how to ensure that AI doesn't result in discriminatory decisions being made, which could occur as a result of bias in the input data or the model itself developing biases, particularly if those aren't managed properly or aren't understood properly. And then there's also potential difficulties within claims handling. That's another example. So if AI is being used to achieve efficiencies, there could potentially lead to a lack of explainability of decisions that have been made. And if you can't explain how the decision's been made, how is a policyholder supposed to challenge that particular decision? Or how is a firm supposed to defend that particular decision? So it does all, and I think it all leads back to what Tom was saying about skills and expertise. And if you don't understand the models and how they're working, and how the data you're putting in can be used, how can you put in place good governance around that and evidence that you're complying with things like achieving good value and good customer outcomes and everything?
It's really challenging. I mean, from an outsourcing perspective, some of the kind of challenges that we've been thinking of is where a firm is using AI to facilitate its internal processes as they relate to an outsourcing with a third party. There's a question as to whether this sufficiently discharges the firm's regulatory obligations and how do they demonstrate that compliance. I guess as an example, if AI is used by a firm to facilitate a DD process with a prospective provider of a material outsourced service, what extra steps will need to be taken by that firm to achieve compliance with the relevant outsourcing requirements? Will the output of the AI be sufficient to demonstrate to regulators that appropriate steps have been taken, and that to ensure the provider has the necessary capability, capacity, expertise to perform that outsourced function? I guess kind of another example is where firms are using a third party that uses AI. How does the firm have oversight of the technology? How can the firm audit AI? Will the AI show its workings in order to demonstrate the steps taken? I guess if AI becomes more intelligent than humans, steps may be taken that lead to an outcome that is commercially desirable to the third party provider, perhaps even the firm, but which does not necessarily lead to good outcomes for customers or compliance with regulatory intent, linking back again to that consumer duty piece. And this tension between kind of conflicting interests in the event of over-reliance on AI and which interests prevail is likely to be, I think, a serious challenge for the financial services industry as a whole. I guess to move it forward, Tony, I'd be really interested to hear from you. Are there any financial institutions equipped to deploy AI? Do new frameworks need to be created? I guess to the point that I mentioned about oversight of AI, can you help give any insight into how a firm might be able to take an AI audit approach or have that oversight?
Yeah, thank you. I mean, there's quite a lot on that topic. So frameworks are partly sort of the internal constructs, it's partly the infrastructure, and on the point about audit and oversight is interesting as well. So I'll try to do sort of a minute on each. But just on frameworks, I think one thing that's super important is board level direction on risk appetite and approach. So AI policy and safety. We're not seeing that at all firms. I think it needs to come from the top. I did talk a few minutes ago about some of the evolving structures that firms are building. So that head of AI role, those AI center of excellence or working group teams, it seems to us that that's a prudent way to focus efforts around evaluating models, evaluating platforms, and centralizing assets that can then be used by the wider enterprise. And when you are building out that asset base, I mean, it starts with AI-enabled business strategy. So what are the a set of strategic actions to achieve the firm's goals and objectives? And then the enablement strategy that sits with that is partly reference architectures and reusable assets. It's partly model management techniques. It's reusable pieces of code and components in the data and the model lifecycle. I mean, the key here is really to build some patterns, some frameworks and patterns, because when you start to unpack the use cases, you realize quite quickly that a lot of them follow the same flow. So there's a similar modeling and analytical challenge, possibly using a same AI technique, and then it's just a sort of a different it can apply to a variety of different use cases. The example is if you build a probability of default engine in AI, you could apply it to credit cards, but you can also apply it to mortgages, bonds, and trade finance, and a number of other things. So common patterns are important, and then it's the data foundation. So everything's built on data foundations, which actually is quite a good link to the infrastructure point, because when you're thinking about what can we reuse, firms that have got accessible data architectures and have been saving their data for the day when it's going to be required to train the models will be at an advantage. But you need to think about a lot more than just the databases. It's the model management, the data pipelines, the development tools, and the compute power. And if NVIDIA's share price is anything to go by, that's a huge focus for the industry. And then, of course, there's the applications themselves that actually sit on top. So there's a huge amount in the frameworks infrastructure space, and this is work in progress for every firm that we're talking to. I mean, I think the big providers are catching up. The early days of generative AI was all about data privacy, and the major providers, Azure, Amazon's Q offering, Google Vertex. I mean, I gather they're all private, offering private data models approaches to deployment. So the industry is addressing some of the big practical infrastructure issues, but there's a lot to do with the enabling framework that you need to build around it. And then on the AI audit point, and I think Tom already said this, the PRA, I think, agreed that the model risk management approach that's industry-wide is extendable and should be extendable to cover AI. So that's really about getting your model validation team involved at every stage of the identification, development, deployment, and monitoring of models. And so that approach goes quite a long way, I think. But what firms need to add to it is some broad measures around an ethics board, AI safety, and things like bias audits and model drift metrics, and there's a number of things that you can apply. And components of of what I would like to call safe AI, which are code level components that can run those tests. So data quality checks, accuracy, bias tests on the models, and testing, so adversarial sensitivity tests. So there's quite a lot under that AI audit, but I think the industry is sort of evolving at pace, but there are some tangibles, so some practical techniques and things that you can do to measure compliance and to apply an audit approach to AI.
Great. It sounds like sort of a hybrid approach is often going to be the most practical there. Yes. Tony, could we also just touch on some examples of good AI use cases in financial services? I'd love to hear a bit more about that from your perspective.
Okay, I'm conscious that we've only got until the half hour, and I said earlier, we've been looking at this for a while, and there are hundreds of use cases, but I can call out a few which we think are very, very exciting and interesting. Fraud prediction, right? So there's a firm in our network called Transparently AI. They won't mind the name check, who are using generative AI to do forensic accounting and forward prediction of fraud, and that they've got data on, I think, all the global listed stocks, and they're running it through the model, and they can build, and I've seen one of the 20-page forensic accounting report in seconds, and it has a risk predictor. It actually has a number as to how risky the accounting and the finances look on this particular company, and they've back tested it against WorldPay and other examples, and it has a 2 to 3 year leading indicator on fraud. So in fact, they were on my LinkedIn, I think yesterday, with another company that had a high score and that has just gone under. So very interesting. Small firm, growing very fast. They've just had a big investment round, some big names actually. I think Franklin Templeton took a piece of it. I mean, this is so one to watch. Transparently.ai. And so something closer to home, collateral call processing. This is one that the Next Wave team built for one of our clients. We've used AI at the front end of a very manual process for aggregating collateral calls and repricing them. It's a 20-step process that one of our insurance clients is running, and we've used AI at the front end to triage the incoming messages and collateral notifications from multiple sources, and then run that through an automated flow. And the data then goes through a pricing algorithm, and then sort of at the far end of the process, there's trades and payments to rebalance the collateral position, and that whole thing now runs in a few hours, subject to the human sign-offs and checks and balances that still sit inside the process. And then if we look a bit more broadly, there's trader surveillance in banking. We've spoken to tier 1 banks about multi-language surveillance capabilities and how that might be possible across multiple geographies and multiple trading platforms in a variety of chat and communications media. We talked about the wealth examples of fact find or portfolio recommendation. I know that's one that a number of wealth firms are looking at, and you can extend that to on the buy side. There's lots of different examples of making investment recommendations or portfolio rebalancing, a number of other things that the technology is well placed for. And in the wider sector, we're seeing customer complaints handling, predictions on customer complaints, and probability of default, I mentioned, is a big one in the lending space, and so same on underwriting risk and forecasting in insurance. And then the last point I'd make is actually that the AI actually helps you build the AI more quickly. So all the platform tools that our team are working with now have AI in them, and there's some neat features. So I can draw a user interface on a piece of paper, take a photo of it, upload it to the Appian system, and it will turn it into a working user interface, for example. So that AI assists to build out the applications. And I mean, when the machines start coding and self-replicating, there's a more existential question about what happens there. But we're already starting to see the development cadence increase coming from using the tools to build the solutions.
Thank you, Tony. That I think really brings it to life. So that's really helpful. My final question. It would be great to hear from each of you about what is next for AI in financial services. So, Tony, you're on a roll. Do you want to answer first?
Thank you. Well, the enterprise rollouts of some of the use cases we've been talking about, I sort of already said that, and I think those examples of building an engine for one purpose and then leveraging it across multiple use cases in firms, and linking AI to automation technology. So we're going to see that happening. But that's when we really start to see job replacement and augmented roles across the workforce, and that is going to happen. You know, prompt engineering and AI solutioning will be top of everyone's CV. Already starting to see that appear. So that's my first point, and I think there's three things. So the second one is losses and scams. We didn't talk about that much, but so far. But unregulated usage of inaccurate or biased models, you know, losses of data, and deepfake frauds. I mean, it's a big thing. So if you look at what's possible with synthetic avatars on Synthesia, can help you build these. Actually, if you look on the Next Wave website, you'll see some, because we present some of our material using AI avatars and voice. So I guess much of the audience would have seen the news around 11 Labs and what you can do with voice technology. And I gather 25,000 politicians in the US took a phone call from Joe Biden, only they didn't really. But when your relatives appear asking for money and it really seems to be them, then that's already opening up a whole range of risks and challenges. And the last one is regulators catching up. So I think we're going to see the regulators starting to catch up. So fighting AI with AI. So the SCA have been talking about an AI tech sprint. There's a digital sandbox with 1,000 external integrations in it, and a call for synthetic data sets for fraud. And there's collaborations. I know the SCA are working with the Alan Turing Institute, for example. So I think there's been a lot of focus from the regulators now on catching up with what's going on in the wider sector.
Thank you. Tom, what's next from your perspective?
Yeah, I think just to tag on to what Tony was just saying, I definitely sort of identify with that. I think at a number of conferences over the last year or so, whenever there's been a regulator on the platform, whether that's been ESMA or the Spanish regulator or the FCA, they have been talking about AI, and they've been very keen to say how many data specialists, how many AI specialists they've been hiring. And I think that is really important from a regulatory perspective, just because of the huge amounts of data. So initiatives like MiFID and EMIR, they've seen so much more data be created, and so the regulators really do need those tools to keep on top of it. I think from a firm perspective, it's, as we've been saying, I think it's once you have a bit more clarity from the regulators later in April, and going forwards, I think you will see more firms embrace AI. It is not going to happen overnight, but I think we're going to see more increasing rollout as firms become more confident and as senior managers become more confident. And also probably as we see things go wrong, or we see examples of good and bad practice from the FCA. And I think I also mentioned already the legal and compliance point. I don't think that this is just a tech thing. I think, again, I second what Tony was saying. I think that there has been a suggestion from at least one of the AI regulatory forums in the UK that you should have that sort of centre of excellence. But I think legal and compliance needs to be part of that, because I think they're the ones that can work out how do you take your existing governance frameworks, how do you rework them, what do you need to do, how do you demonstrate compliance. So I think it's not just tech. I think there's still a big role for legal and compliance too.
Sarah, any final thoughts from your perspective on what's next?
Yeah, so I think just building on what Tom's just said and the increasing role of legal and compliance, I mean, this goes hand in hand with documenting what you're doing and making sure you've got a clear audit trail in place. I feel like I'm constantly talking to clients at the moment about the importance of clear audit trails, and I think it's just as important where you're using AI. So it's all well and good to have had the conversations about AI internally and to maybe have thought through internally about the regulatory impact, but to have the documents in place and so that you can evidence that those discussions have taken place and evidence the reasonable steps for senior managers that you've taken to ensure that you are achieving compliance and you're thinking about achieving good customer outcomes, and all of that good stuff with the consumer duty, it's so important to document that and to be able to evidence it. And I think this is going to become all the more important, because not to want to end on a sour note, but I would have thought that as this kind of moves on and the regulators' thinking develops and as guidance comes on, they're probably going to be taking quite an interventionist approach in relation to AI. We're seeing at the moment with the consumer duty, the regulators writing out to firms, asking for information so that they can get a feel for how the consumer duty is being implemented. And I would imagine at some point they're going to be doing the same thing with AI so that they can really assess how firms are dealing with AI and figure out where those potential risk points are. So I think that's inevitably going to be the next step after the 30th of April, when we've got those indications from the regulators as to what their expectations are of firms in the financial services world.
Thank you so much, everyone. So perfectly on time. I want to thank all our wonderful panelists for their insightful answers. We have covered AI regulation in both the UK and other regions, the biggest regulatory challenges in preparing an AI framework, the biggest concerns and challenges for firms, and we've also heard from how financial institutions are approaching AI generally, their current status of deployment, and some fascinating use cases. Most importantly, we must tell our children to go into prompt engineering and AI solutioning. I believe that's the future. So thank you again to everyone who's joined and listened to this webinar. Please do reach out if you've got any questions to any of us directly, and there's been a few already and we haven't had time to answer them, but we will try and get back to everyone directly in writing. So thank you very much, everyone.
Thank you.
Thanks all.